Hello, hello, hello. Happy. What is it? Wednesday already? Wednesday? All right. Halfway through the shortened trading week. How is everyone doing? Good morning, Sterling. Also, Sterling putting in the news this morning. Thank you. Good morning, Patrick. Good morning, Jacob. Meta Trigger Daily Double Bottom. Remind me, and we'll maybe have a time to check that out. Hey, Christoph. All right. Hey, everybody in the background. People still filtering in. All right, we had some balance of trade information out earlier. Fed Collins speech. I know Sterling was putting in that, but it was more just we're data dependent. We're going to wait and see. If we need to hike again, we will. Blah blah blah. If not, we'll pause. Blah. There we go. We summed up Fed Collins speech. Red Book, it actually came in 4.1 versus 4.2, so still sustaining slightly higher. I think a lot of that was back to school stuff, and we should see it roll over again pretty soon. Coming up 15 minutes after the cash open, we have the S&P Global Services PMI final numbers and the composite PMIs. Those are still forecast to be in expansion, although dropping from the prior ones are the forecast. Then we have the more significant, the larger firms, the ISM Services PMI. Also watch the employment and prices components of that. But everything's still expected to be in expansion. If something drops below 50, really pay notice to that, except if prices bump up. Prices bump up, especially higher than 56.8. Other than that, we have the Fed Beige Book, and Fed Logan is speaking at 2 p.m. Central. Sort of a mixed market. The Meta, already brought up in the chat, and Google Comm Services a little bouncing. Some of the other mega caps pulling back, semiconductors and technology. Still healthcare, slight rotation into that. Financial sector pulling back also. Let's just refresh this. So you see comm services, real estate, consumer defensive, and technology. We've got some profit taking in there, but we have not broken any key support levels yet. The Fed Watch tool, we refresh it one more time to see the latest and greatest. Still a pause through next May, barely the pause through next May, but that's where we sit. No rate hikes priced in, although the November one's climbing a little more again, but still only 40% probability. Fear and greed, still in greed, even with this pullback. All right. Good morning, Tony. Good morning, Options 22. Yay, AMC has followed a new perspective. I'm sorry, you gotta really, if you're still bullish on AMC, you're insane. And we have GameStop this afternoon. Zscaler did a beat yesterday, trading against a triple resistance point. So if you're looking for that, watch if it can get some momentum for a potential breakout if the market starts bouncing. As I said, GameStop after the close today, Dave & Buster's. That's really about it. Tomorrow before the open, SAIC. But remember, earnings season really winding down. All right. So I also recorded with Bob the Futures Edge podcast. We recorded it yesterday afternoon, looking at a lot of longer term levels and some discussions on September being the weakest month of the year and looking at key long-term levels. So that was being edited now and will be out by next Monday, but is long-term focused only. So you should take a look at that. So after hitting the first target in the S&P, actually the first target was slightly incorrect. There was the first target. After hitting the first target, pulling back, couple day pullback into the key support zone. The key support zone, we're trading right there. And you remember I watched between the candle bodies and the trigger point of the double for key pullback levels, and we're trading right at that trigger point now and pulling back into the rotation zone. If we do drop much farther, the next is until 44.70, but right here trading 44.95, 44.90 is pretty key support, so pay attention into that. And a very orderly pullback so far, very orderly. Nothing really disorderly. Also, you see here on the 4-hour chart at this 4480 to 4485 area is the 4480 is actually the support point from this little clear path move. So we're into a very key area for support. If that does break down, next thing would be about 44.55. I'm going to be watching for some kind of rotation coming up over between today, tomorrow. We still have weekly cycles climbing. We have daily cycles rolling over, so still a mismatch on the cycles, but this could easily get to the bottom this week and then start the next upward push. The only thing that invalidates that pattern at this point is a close below 44.24. So that would invalidate the short-term bullish pattern. Levels that I will be looking at moving up this morning. We have the little minor breakdown level about 45.16. My first area is going to be 4,500, where we had a fair amount of resistance. You see overnight European session resistance at 4,500. So we get through there. Then I'm going to about 45.15 and then to about 45.35 to the upside. And then it would be back to 45.45. There are all the levels. Did I miss a triggered 4-hour double top? And yes, that has almost hit the third target last night. This was very, very sloppy. It could have been traded, specifically because it was coming back into the support zone. But yeah, it was very sloppy. Finally triggered. Took a while to trigger. Yeah, you've come into pretty much this final target area right now. So, yes, you did miss that. But that's okay. You're not expected to catch everything. What else do we have? NASDAQ. Again, little bounce yesterday, but so far, if you look at this on a closing basis, just little up close, little down close, little up close. But so far, if we switch to the line chart, you see just bing, 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 ricochet rabbit. All right. Still, NASDAQ key support about 15,420, and then major support 15,333. Looking at this on the minor levels, I'm just watching the support. The NASDAQ's holding up a lot better, 15,422 to about 15,400. And that's coming in. There's a fair amount of support here, and then 15,333. So if we get below 15,333, that's where I'll sit up and take notice back to the downside. We have not hit the stop reduction target on here, so the invalidation point for this triggered double bottom would be a close below 14,912.50. So that's a long way off. Other than that, targets to the upside, the key level I'm watching going into this morning is 15,575 area. Above there, about 15,656. And then 15,734 are the targets to the upside. The Dow, key area, we're between that 50 and 62.5. So unless we get the close below 34,480, still watching for a bounce in this area. Is there a bounce play yet? No. We're trading against some pretty key support area, but if that breaks 34,480. To the upside, let me just go over that. For the, what is it, the boomers who trade the Dow? 34,725, and then we're about 34,800. What else do we have? We'll get to Meta in a second. And I don't think they're there yet on completely containing inflation. Oil's bouncing again. We talked about oil on the podcast too. Russell, it finished the double and then we pulled back. So the key level on the closing basis for the Russell is 1870. 1870.8 to be exact. But this is pulled back into the bounce zone. So I'm watching, unless we close below that 1870.8, I'm watching for some kind of little, at least consolidation. Might not be a strong bounce yet. Remember, we don't always have to have trend days. We can have back and forth days that establish more of a base. The key level would be 1894 on a bounce, and then about 1902. The VIX, still very orderly, still in the lower bounds. Going to be watching if we start rolling back below about 1418 for a slightly more bottoming area, at least short term. If that breaks down below today's low, and especially below about yesterday's open, coming in about 1427. DAX pulling back still. Pulling back, but the pattern's still in play unless this closes below 15,670. Deeper pullback, but that's about it. Come on. Give me my lines off. So that's the only thing I'm watching there. The notes, if we close below a 109.26, we'll be watching for a continued pullback. Here I'm watching for the possibility of a little short-term base. But we'd have to really break above this 110.04 to confirm it. The yield should still, even if we pull back, watching for higher yields still to kick in, at least return to this 4.3 area. The 10-2s still holding up near the breakout point, but not breaking out yet. Dollar index, after strong day yesterday, hitting the next key harmonic point and pausing right there. So we start breaking above 104.50. The next key target cluster is 104.87 to about 104.94. Major support 103.85. So we're pausing right at that little minor harmonic. Crude. After the rally, the little pullback intraday yesterday with cycles at the top. The key pullback, because we could at least get a pause or some consolidation, but the key pullback point is about 84.40, 84.50 with the rising daily rotation zone. So that's my first major support point. My minor support points where we've already tested at this 86 level. Keep in mind, we're still trading above the area that was chipped away. We had the key resistance from late last year, early this year, slightly broken in April, then bigger pullback. August chipped away at it again. We got the reloading back to the weekly rotation zone and then broke through. So this is now major support area. Even if we broke that other little minor support, again, your 81.65, 81.70 is some major support. So unless we really get below that, not worried about, I'm still bullish on crude. Gold, not much going on here just yet. Pulling back, the key pullback level at this point after never closing above the 62.5 on the short term, the key pullback level I'm watching is 1938.6 on a closing basis. If we close below there, I'll watch for a retest of the 200. What else do we have? Every single monthly non-farm, has been revised down by an average of 16.8. I didn't realize it was 16.08%. Thank you for that. Hello, Eric. Thank you for tuning in. June's non-farm payroll, what? Is there something down with revising it a whopping 49.76%? I don't see anything wrong with those kind of revisions. It's just a slight error. It's like a minor flesh wound. It's a slight revision there, don't you think? 10-year JGBs bouncing back up. The yen's still pausing, not yet to the next key 87.5 area, 148.85. Key support 146.32. Euro, nothing much has changed. If it does bounce, I'm just watching for a rollover play, possibly kissing the channel away with the declining rotation zone. So anything on the bullish side would be very aggressive from my perspective. I'm still expecting the pound to break down and finish the move back to the 200 area. Bitcoin still sitting back in its lower consolidation range, but we covered this also. If we get to close below 24,750. Watch out below in Bitcoin. Your spiders and your Qs. Still, after hitting the second target in here, the key support, we're trading 448.35, 448.40, 448.30. I'll bump that down just a hair. 448.11. I've been watching that in the open. And unless you start breaking below about 447.50, if you start breaking below that, then I'd be watching for closer to this 446.23 area. Other than that, watching for the pullback with cycles rolling over and then the next potential bounce to complete the 87.5 rule and the double pattern. So again, still an ordinary pullback so far. Nothing strange about this pullback. Then it will get interesting. If we complete some of these patterns, it will get interesting. But if you're wondering, because it has hit the 75%, do we have a bigger double pattern? Yes, we do. Completely valid. You see here on the weekly, you see here, I'd shift it to the conservative side, but we don't know if this top's in yet. But it's reversing this move. So that's the key line in the sand to watch. If something happens, 433 is your key level. Not expecting anything like that to happen today or anything, but that's your key level. Also, your Qs. Is this a double top? Yeah, I again go to the right-hand side once we know the top is in. But, oops, let me just switch this one. Let me switch this one over to the double targets, but it's reversing this move. So the key level on the Qs, which would also take it below the weekly rotation zone in September, long way off from triggering, but 354.71 is your key level on that. So that's where I'd set an alarm if you did get a bigger pullback. What else do we have going on? Let's look at Meta. Meta, which it is a valid double that has been confirmed, but it was triggered yesterday. So it triggered yesterday. So conflicting patterns, but if you were trading this short, and this is where I like to trade or switch it to trading around a core position, and lightening up, and then if the short pattern is not invalidated, then I'd ride the long pattern up, and then if it doesn't validate, just keep riding the long pattern. If it gets to like the first thing, doesn't invalidate the short pattern, and then rolls over, the short pattern can kick back into play. But right now, the first key target is 311.17. So that is officially triggered with yesterday's close. Yeah, it is just a scratch, Tony. A minor issue, 49% revisions. If anybody still believes anything going on anymore, I don't know. I don't know what to tell you. I just don't know. Tesla, still, unless it can close above 266.69, not interested in anything from the bullish side. Still watching now. We have a pretty strong breakdown level at this 244 area, so that's what I'm watching if it breaks down. Nvidia still's got the double that's nowhere near triggering, but that's the only thing I'm keeping an eye on with that. So that's really about it. That's about it. Just an ordinary pullback so far. The question that should be being asked is why the Fed isn't throwing a fit unless they are complicit. They say they kept raising rates because the numbers shows a hot labor market. They're just going to keep All right. The Fed is just going to come up with a reason to either keep raising or pause because they want to change the Fed put narrative and a bunch of easy money narrative. So they're just going to come up with another reason to do it. Now, labor could be cooling, all right, but it's going to be something else. They have to get this repeated, they're going to cut, they're going to cut, they're going to cut, they're going to pivot out of the mindset of the market. So even if they say labor's cooling, they're going to have another set of numbers that they're going to say we're going to have to keep pausing for longer. What'll be interesting is if we get a bottom fall out in the market to see if they actually will pause for longer, or whether the political pressure to always prop up the market will come back into play. That's going to be the next major thing to watch. But the market has not done anything shocking yet in terms of a pullback. We don't, by the way, have doubles yet in the futures. So we don't have doubles. We did in the spiders and the Qs, but we don't in the futures. I'm still watching for these doubles to form in the futures. They might never, ever trigger. They might not even form. Who knows? But that's what I'm keeping a close eye on. Take a look at FANG. That's a FANG. Yeah, that was a nice break, and then a nice little bounce right there. Let's see, yeah. Any pullback in this, let me pull off the old levels. Any pullback, that's sort of funny. I haven't looked at this chart in forever, but look how the old harmonics held up. So let's just see. Oh, off the 75% harmonic, so we should still probabilities are still for that 162.71 on any pullback into the daily rotation zone. Interesting. Thank you for pointing that out, Christoph. You do have a little minor gap left behind, so your key support coming in about mid 151. Mike is usually right. Well, I think I'm right more often than I'm wrong because of the probabilities, but that's just because of the research. You know what's hard? That's why I have to rely on patterns. It's all about the timing. And that's why I have to rely on the patterns to trigger and sort of show a roadmap. But keep an eye on some of these key topping areas. That does not mean, and still the trend, I'm going to reiterate, the probabilities in the short term are still up, even with this little minor pullback. So, nothing has changed in the short term. The long term, you'll have to tune into the podcast next week. That should be out on early Monday morning. With that, I shall talk to everyone later. Hope everyone has a wonderful trading day, and bye for now.